please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
0.5% lower, 10,750. So more or less where the pre-market told us, 746 if you please. Sensex down about 170.
I would be willing to take my money levels.
The NCLT yesterday admitted Ericsson's plea against Reliance Communication under the Insolvency and Bankruptcy Code.
Thanking the party workers for having put in all the effort to ensure that the party won in these many places.
Midcaps have recovered about 200 points from the lows. The Nifty Bank has recovered about 300 points from the lows.
Final count is about 60 down on the Nifty. Midcaps much better. Of course, the Nifty Bank is where the headlines really lie. While swings on the last street once again as the Sensex and the Nifty continue to decline, midcaps end with marginal losses after a late pullback.
ITC perks up in trade after fourth quarter earnings surprise, even as cigarette volumes may have declined by 2%.
A blowout fourth quarter for JSW Steel as it beats estimates on all fronts. Hindalco slips in trade as lower copper volumes hurt the top line in the fourth quarter. TVS Motors also tumbles in trade after operational performance and margins take a hit.
The Nifty Bank is the worst performing index today. ICICI Bank slides over 3%. PNB sinks over 12% after reporting a 13,000 crore rupee loss. Bank of Baroda and other PSU banks also under pressure.
Reliance Communications slides in trade after the Company Law Tribunal admits an insolvency plea filed by Ericsson against the company. JP Infra stages a recovery along with JP Associates after the Supreme Court halts the liquidation of JP Infra. Well, those are the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about 8 hours of market action in 5 headlines. I'm Surabhi Upadhyay and with me is Ekta Batra. Ekta, I guess a very interesting day today. Lots of twists and turns, but the net result seems to be that it is bears in control. The big day after Karnataka, the market seems to be in a bit of a pause, wait and watch mode.
Yes, absolutely. But the global markets haven't really complied, so they are playing truant for us. But over the next 30 minutes, we will be discussing those top 5 headlines and our experts will be answering your stock queries. Joining us to answer all of those queries, we have Geojit Financial's Gaurang Shah and technical expert Ashwini Gujral. Evening, gentlemen. But before we get to y'all in terms of answering all of those questions that we do have, Surabhi, quite a topsy-turvy day.
Oh, absolutely. So just some of the highlights that really stood out for me. One is that you can't deny the fact that there was pressure and there were 2 different waves that the market saw where there was an attempt at a pullback, but both of those waves got sold into. And there was weakness on a lot of the different pockets of the market. So you had big names from the banking universe that were weak, stocks like State Bank of India, ICICI Bank, even marquee names like HDFC Bank that were under pressure, the likes of the biggies like Reliance. So there was a lot of pressure on the large cap side of the market. A lot of the macro commentary is now coming back now that Karnataka is behind us. So high bond yields, whether it's the US market or whether it's our market here, where the talk is around 8% on the Indian 10-year. So a lot of that talk was back on the street today. Concerns around crude oil prices, those realities are once again the talking factors. If there was a silver lining, then perhaps what we just told you in the headlines, that the extent of the mid-cap selling today abated. There were some result reactions where the numbers were good, where you were getting some good sort of a leg up from the market as well. But all in all, Ekta, I guess, overall, the color was still weak. What stocks have been on your radar today?
Well, absolutely. Well, let's start with the FMCG space. We had ITC, which in fact reacted to its numbers, but we had HUL, which actually sped past ITC today and closed as the top gain on the Nifty. We had Lupin and Cipla, which showed divergent trends. So Lupin outperformed post numbers, but Cipla was quite subdued, down around 2.7%. We had a lot of the banks which were under pressure, and we've been pointing that out. So Yes Bank, ICICI Bank. Yes Bank was outperforming. Yes, ICICI down 3.5%. State Bank of India as well. Bajaj Finance and Finserv in focus ahead of its numbers tomorrow. And other stocks from the Nifty space included something like a Hero, BPCL, Bharti Airtel, all of them underperforming. From broader markets, want to point out Reliance Communication, double-digit losses there. PNB, double-digit losses there. Adani Transmission also down 8.5%. Reliance Naval, no sort of respite coming in a couple of these high beta stocks, but something like an IBREL and Edelweiss Financial managed to outperform.
Okay, that was the stock action of the day. So let's straight away get to our experts to get you the advice that you need. We have Ashwini Gujral joining in on the technicals. Ashwini, what did you think? Today was the day after yesterday's decline post Karnataka. What did you make of the selling today?
The difference between yesterday and today was that today mid-caps did not fall. And also today most of the fall was led by large stocks which had been outperforming till now. So basically the market looks like it's in some sort of a correction, and this could get a bit deeper because financials are leading it on the downside. So while today was not as negative as we would have thought in the morning, but you can't say that it's looking better than the morning. It may just be a pause after a large decline yesterday plus another decline today. So today the market, you can call it sideways to down. The real trend may happen tomorrow when you have the Bank Nifty expiry and where fresh selling could emerge.
Okay, all right. So that's on the markets in general, weak session. But let's get to the second headline that we're tracking today. ITC got a boost in the market today thanks to its strong fourth quarter numbers. The cigarette maker saw a jump of 10% in its profit and registered a growth of 64% in its FMCG business. My colleague Mangalam Malu now joins in for number crunching and what really went on behind the numbers in ITC. Mangalam?
Well, for ITC in the fourth quarter, the results appeared pretty much in line with what the street was expecting, with a positive surprise that came in from the FMCG others business. Out there in the FMCG business, we saw an EBIT growth of 64%. That is what led to the margins expanding to almost about 39%. So let's take a look at the numbers. Revenues declined by about 4.8%, but not sure we can compare them given a few adjustments in the base with regards to tax. So let's take a look at the EBITDA. That one was up 7% with a revenue decline of 5%, EBITDA moving 7% higher. The margins have actually came in higher by almost 400 basis points. Net profit on the back of that was up 10%. The key segment for ITC, cigarettes, out there, it appears initial calculations suggest that the volumes have declined about 2%, which is pretty much in line with what the street was working with, 2 to 3% decline, and that is inferred from the cigarette EBIT growth of about 7.5%. Now to the positive surprise, FMCG comparable revenues, they grew by about 10%. This was a number revealed by the company in their press release, and the EBIT out there grew by 64%. Remember, on a sequential basis also we saw a sharp increase in the FMCG others EBIT. The management has a great thrust on operational turnaround and growth of the FMCG others business. All the other segments reported a fair amount of growth in their EBIT. Hotels as well as paper business EBIT was absolutely flat, but there was some decline in the agri-commodities business operational performance. That said, the results were pretty much in line with a positive surprise coming in from the FMCG others business.
All right, Mangalam, thanks so much. Yes, it is Mangalam's sector that's pretty much fired on all cylinders in this earnings season in the fourth quarter. We've got some queries now. This one actually is on ITC. Rahul Kumar has sent us a question on the stock. He's got 100 shares, bought them at a price of 267, and he has been holding on for now 3 months. Wants to know what the outlook is. Let me toss this to you first, Ashwini. ITC, at least on the fundamentals, there's no problem. What do the charts say? Okay, I don't think we have Ashwini on this just yet. Gaurang, let me take this to you. How did you view the numbers? And would you look at buying the stock now?
So, good evening, Surabhi, to you and Ekta and all the viewers. I think the most important thing is the acquisition price of 267 of ITC. And historically, if you see, I think sub 260 is virtually not possible for a very long time, and we maintain a positive view. And as Mangalam was elaborating on the numbers which unfolded today for ITC, I think all cylinders fired, including the FMCG and a little bit of contribution from the tobacco business. What I would like to see going forward is the renewed strategy as far as their agri-business is concerned. And more importantly, I was listening to the management commentary on your channel itself, and they are quite excited about newer launches in the FMCG category. I think that would drive the margins and top line number going forward from here on. More tailwind to add, I think demand from semi-urban rural India remains extremely positive. This despite the fact that FMCG remains a very competitive sector with Patanjali's presence and its competitiveness. And nevertheless, ITC delivered inline expectation, and so did HUL, the two big boys. Long term, I would advise to stay invested in ITC.
Okay, well, Ashwini, what would your call be?
More than the results, it looks like a great amount of tailwind with anything consumption, anything FMCG, and that way, ITC hasn't really participated. So maybe, 315, 320 is a likely event out there, but there are better FMCG stocks. I would still go with, Lever, Dabur, maybe even say Jubilant, Titan, etc. ITC is still number 6 or number 7 in the pecking order.
Okay, all right, that's the word coming in on ITC. But let's get to our third headline of the day. We continue with earnings. First up, TVS Motors. High expenses dragged the auto major's fourth quarter earnings. Net profit jumped over 30% compared to last year, but failed to meet street estimates. Revenue increased by 40% and was in line. However, margins and EBITDA both were below estimates and disappointed the market. Meanwhile, Hindalco from the metal space reported what was a mixed set of earnings. The metal giant's copper business EBITDA failed to meet street estimates. Standalone aluminium business continued to do well. Nigel D'Souza joins in with an analysis on the Hindalco numbers.
Well, Hindalco's numbers were a mixed bag. The aluminium business did very, very well, while the copper business was a bit of a disappointment. In terms of the top line, well, we did see a growth of roughly around 6%. We were working with a number of around 2%. So yes, there was a bit of a top line beat that we saw. But margins did compress by more than 150 basis points or thereabouts. We were working with a compression of only around 80 basis points odd. And I'll tell you exactly why. Because the aluminium EBITDA number, that came in excess of around 900 crores. The street was working with a number of closer towards 800 crores odd. So aluminium business did splendid. The copper business, though, that came in with a number of around 330 crores or thereabouts. The street was expecting a number of around 380 to around 400 crores odd. So that really was the big miss, and that's why, in fact, we do call the numbers a mixed set of results. Aluminium doing well, copper not so well, in fact, missing estimates by a big margin. Moving to the profit number, that as well was a bit of a miss because that came in low by nearly around 25%. Keep in mind that Hindalco has been gradually paying its debt up, and that was perfectly reflected in its finance costs. On a year-on-year basis, it was lower. Even on a sequential basis, it was down by nearly around 7 to around 8% odd.
All right, Nigel, thanks very much for that breakup. Well, we've got some questions coming in. Raj Sethia has 500 shares of Hindalco, bought them at a price of 101. That's per piece. He has been holding the stock for 2 years now, wants to know if this is a good time to be selling out or not. Ashwini, Hindalco for you, gotten at 101.
Metals are doing well because globally, growth is higher. So that way, all sorts of decline on metal stocks should be bought into. Possibly, I think the steel stocks are a bit better than Hindalco, but overall, all metal stocks still look higher.
Okay, well, we now have another query. V. Balasubramaniam has sent us a question on TVS Motors, wants to know the right time to invest 50,000 in that particular stock. Gaurang, what would you recommend?
Well, Ekta can't time the market, but yeah, on the fundamental side, we remain positive. I believe new launches, ad promo expenses and input cost was at an elevated level for the quarter reported numbers for TVS Motors. But if I have to reflect upon the month-on-month numbers that was delivered by TVS Motors, that looks very impressive. And this is also one of the themes that you can play in the sense if you're looking at an uptick in terms of demand from semi-urban and rural. So one of the themes that you can play in the sense if you're looking at an uptick in terms of demand from semi-urban and rural India. And of course, new launches in the mid and high end would definitely elevate them to have a better market share. And not to forget, they have motorcycles as well as automated scooter. Automated scooter is doing extremely well. And my sense is that will only see more traction on the higher side. So long term, hold on to TVS Motors.
Okay, all right, that's thumbs up on TVS Motors. Well, on that note, we need to get into a quick break. Before we do that, let's listen into some market opinion that we gathered throughout the day.
The fundamentals of the market are not looking really that great, especially on the macro side, whether it is the bond yields, inflation outlook, currency outlook, etc. So I think macro front is clearly much weaker today as compared to what it was, let's say, 12 months ago, 8 months ago, something like that. Even from the bottom-up side, as I mentioned, while the absolute level earnings growth seems to be showing signs of improvement, but that's there in the numbers, that's there in the expectations already. And at the margin, what we are seeing is still small earnings downgrade. We are working with an assumption that over the remaining period of 2018, at best, we will get market returns maybe in low single digits.
Really, the valuations are on the higher side for the market as overall. I think the large caps are a better bet at this point of time. There are many headwinds. If you look at globally, in US interest rates are on the higher side now. They've crossed 3%. In India, again, it's looking like it's going to touch 8%. It's already at almost a 3-year high. The currency is at about 68 plus. You have crude, Brent crude, which is going closer to 80. So there are many macro headwinds that are in front of us. Somehow market has been resilient and has been ignoring some of these negatives. But I think it's time to be cautious.
Tuned into markets today. Talk back. We have Ashwini Gujral and Gaurang Shah here with us to answer all of your queries. Well, straight to the fourth headline now. The Nifty Bank was the worst performing index today. ICICI Bank slid over 3%. Meanwhile, the PSU Bank, PNB, sank over 12% after reporting a 13,000 crore loss last evening. Bank of Baroda and other PSU banks also were under pressure in trade today. Okay, well, let's get a quick query in from Ashwini then. Ashwini, what would you suggest in terms of positioning on the Nifty Bank, especially ahead of the Nifty Bank expiry tomorrow?
See, like today, you saw that, Bank Nifty has these 150, 200 point rallies. So it's still a sell on rally index. And the problem is that with vertical rallies, the declines can also appear fairly large. So even after a 1,000 point decline, there could still be another 300 to 500 on the downside. Now all that depends on global cues, etc., and bond yield and this that. But 25,500 to about 25,800, that zone could be possible on Bank Nifty.
All right, Ashwini, we've got another caller on bank stocks, so let's actually get to him. Mr. Mukandan is calling in from Chennai, I think, with a query on Andhra Bank as well as SBI. Go ahead, sir.
Hello, I'm Mukandan here from Chennai.
Yes.
You see, the last 4 years I observed that Andhra Bank is not declaring even dividends, and the stock value also is going down. Is it worth buying shares in that bank, Andhra Bank, as well as State Bank of India? After top split, I didn't get any additional shares information from them. While initially in IPO, I did invested 200 shares.
Okay. Well, that's a corporate specific query. I think we won't be immediately able to help you with that. But let me try and get you an answer on Andhra Bank. Gaurang, now, the gentleman here, I don't know why he would be looking at Andhra Bank. I can understand his concern because the bank, the shares have just been falling every single month. Do you think there's a bottom around the corner? Would you at all advise buying a stock like Andhra Bank?
Surabhi, at times, a lot of us fail to identify the bottom when it comes to some of the PSU banks, given the kind of issues that some PSU banks, mid and small, have to deal with. So, you're better off, and given the backdrop of numbers unfolded for most of the mid-size, small-size PSU banks, it's only prudent to stay away. I can't comment on Andhra Bank specific because we don't have a coverage, but you're better off buying into private sector banks, HDFC, Kotak, Yes Bank, IndusInd Bank, RBL Bank. As a disclosure, we have positive on all these. And on the query on SBI, now, possibly he can get in touch with either his broker or depository, or maybe his financial advisor to guide him as to why he has not got the split shares. And I believe he is having an old investment in SBI. So prudent to possibly write to the registrars and get clarity over there.
Okay, well, that's on a couple of the PSU banks. But Ashwini, let's remain with this particular topic. What, in fact, is your call on PSU banks such as PNB? Is it worth shorting afresh?
The PNB is at a very interesting place. If you take a monthly chart, which basically shows you many years worth of data, you will see that it has tested 70 has been a bottom in 3 or 4 occasions. So what can happen from here is that you can easily get a rally from 70 back to 90 and then it falls again. So that way incremental shorts before that sort of a rally is not a great idea. Finally the government will come out with something, some extra money or something will happen which will lead to a rally, and then from there I think these are good shorting candidates. If you short here and something positive happens, you could be under 25% worth of loss.
Absolutely. Take that caveat, Ashwini. Absolutely. Worth keeping in mind. Let's move to the last headline of the day. It's been a tale of two debt-ridden companies. Reliance Communications was down in trade after the Company Law Tribunal admitted an insolvency plea filed by Ericsson against Arcom. The other stock that was in focus was JP Infra, which staged a recovery after the Apex Court halted the company's liquidation. Well, we have a viewer query coming in. Nagesh Borgu has a question on Reliance Communications. He wants to know the right time to buy 5,000 shares of the stock. Well, Gaurang, what do you say? I think there are a lot of high-risk takers out there. What would your advice be?
It's only advisable, Surabhi, not to do suicidal trades. And if I'm not mistaken, over the last almost 5 years or more, we've been having a reduced recommendation on Reliance Communication. And these are stocks, when you eventually go and sell them, you might find that the brokerage is very high. So thank God he's asking question before buying. And I've always maintained you should buy quality, not quantity.
Okay, all right, Gaurang. Well, sound advice coming in there. But with that, it's also a wrap on the show. Thanks very much for watching.